Can I get a loan modification for a HELOC, home equity line of credit? Have you ever wondered if you can adjust the terms of your home equity line of credit? If you are facing financial challenges, you might be in luck. Yes, it is possible to get a loan modification for a home equity line of credit, but the process can differ depending on your lender. A home equity line of credit is a revolving line of credit secured by the equity in your home. This means you can borrow money as needed, up to a certain limit. When you seek a loan modification, you are essentially asking your lender to change the terms of your existing loan. This could mean lowering your monthly payments, extending the repayment period, or even adjusting the interest rate to make things more manageable. To qualify for a loan modification, lenders typically requiring proof of financial hardship. This could be due to a loss of income or unexpected expenses. Generally, your home equity line of credit must have been open for a minimum period, and you should have made some payments already. It is also important that you have not exceeded the lender's modification limits or violated other terms of your agreement. If you find yourself unable to keep up with payments, it is best to contact your lender as soon as possible. This applies whether you are in the draw period, when you can borrow, or the repayment period, when you are paying back what you owe. The modification process usually takes about 30 days. You will need to gather some documentation, including your home equity line of credit number, details about your monthly income and expenses, and an explanation of your hardship. Some lenders may requiring you to go through a trial payment period to prove you can meet the new terms before finalizing the modification. Once you successfully complete the trial payments, your lender may offer a new loan agreement that reflects the modified terms. Keep in mind that a loan modification can impact your credit score. It may drop between 30 and 100 points, and this modification can stay on your credit report for up to 7 years. However, your score may improve over time as you continue to manage your finances responsibly. Also, be aware that some lenders limit how often you can request a modification. For instance, you might only be able to request 1 or 2 modifications within a 12-month period or within 5 years. From a bankruptcy perspective, a loan modification can be a helpful alternative. It allows you to negotiate directly with your lender to adjust your payments without facing the legal and credit consequences of bankruptcy. However, if a loan modification is not feasible or is denied, bankruptcy may offer a more comprehensive solution for managing or discharging debts. In summary, obtaining a loan modification for a home equity line of credit is possible if you can demonstrate financial hardship and meet your lender's requirements. It can be an effective way to manage your debt and avoid bankruptcy, but it may affect your credit score and is subject to lender approval and limitations. If modification is not an option, bankruptcy remains a valuable alternative for debt relief and negotiating with creditors.